This shirt I have smells weird. Oh, am I on? Sorry about that. I grabbed it out of the garage. It smelled quite right. Wow, what a day, guys. Have we tried plugging it in and plugging it back on, or?
Problem is there's like 2,000 plugs now. It used to be easy when it was just 40 validators or whatever when we started. Yeah.
Is this live? Are people watching?
I don't know. Tushar.
Looks like it. Yeah, I think so.
That's great. All right. Well, let's kick things off. I want to thank everyone for joining. It's been, thank you. We are live. Maybe we can go around the horn and have everyone introduce themselves. I'll start. Frank Chaparro, Director of News at The Block. And this is a really interesting day to have a panel about decentralized finance and Solana. And we'll start with Kanav, who recently just got promoted to president of Jump Crypto. Very excited to have you here. And then we can go around the horn. Maybe just say your name, your position, and
Frank,
a little bit about yourself.
Yep. Yeah, I'm Kanav. Like Frank said, as of today, I'm the president of Jump's crypto efforts. We're traders, builders, and big participants in the crypto space across the board.
Great. Anatoly?
I am a CEO, co-founder of Solana Labs. Solana is, my technical brainchild, so I'm responsible for all its warts.
Yeah, just like children, some
Yep.
Some grow up and are a little weird. Others become doctors, and you have ones that are in between. We can go over to our friend above, Tushar.
Hello, everyone. I'm Tushar, managing partner and co-founder at Multicoin Capital.
Nice. Big investor in the Solana ecosystem. Got to get Kyle back in here to unplug and plug the thing back in.
I don't know how involved Kyle is on that side.
And last but not least.
Hi, I'm Andrew. I'm one of the co-founders for Synchrony.
Yeah, and maybe a little bit about what Synchrony is for folks.
So Synchrony is a copy trading and composable index protocol built on Solana. So it's a means to sort of streamline users' entry point into decentralized finance.
Gotcha. So let's kind of just take a high-level approach to kick things off. When we think about the evolution of DeFi, right? Today kind of illustrates when things don't always work out. But maybe we can kick things off with some of the benefits of a sort of decentralized system over what exists in traditional finance, and then we can get into maybe what happened today and how you overcome those types of barriers. We can start with Anatoly.
So layer one blockchains are a computer, and a lot of finance runs on computers. But what's interesting about them is that it's a single instance of a computer that's globally agreed upon, and it's got some really nice properties about synchronization and how fast that information syncs globally, and that it's can only be modified with cryptographic signatures. So it's not like a Windows where everybody has an account. It's a bit more interesting than that. And once you have those properties, you can start building finance, trading systems, pools of liquidity that are represented by balances in this computer and things like that. The opportunity, I think, for this is enormous, right? Like, you think of what is finance. It could be advertisement, right? Like the Google ad view that I see is the internet is the money on the internet. It's 0.2 cent microtransaction for my attention. And all those things could be replaced in theory with sufficiently cheap cryptography.
Yeah. Kanav, I know you guys have an interesting story getting into this market. There's the promises of speed and efficiency, low costs for transacting in large size, not just with Solana. A lot of different layer ones are trying to do this. But when you see something like today, how does that sort of fit into, what does a firm like Jump do to sort of navigate 6 or 7 hours of downtime?
Yeah, that's a great question, Frank. Just to start off, something as complex as Solana, where it's a new operating system plus a database plus something completely, revolutionary in that aspect, where it's been built in a distributed fashion, is really, really hard to build. And Tolly and team have been at it for 4 years, and we expect that it's going to take a few more until every kink in the armor has been kind of, closed out. The centralized systems are also, not foreign to have any kind of downtime or, outages. Sorry, can you hear me?
Mm-hmm.
Okay, I have a bad internet connection. Centralized systems are also.
You're coming in crystal clear too, so really good lighting.
Okay, excellent. Okay. To having downtime, and we deal with exchange outages and failures across the board on a lot of venues. We've had kind of our validation team, in the war room with Anatoly Yakovenko, helping figure out how we help bring the network back up and how consensus gets fixed. And that's kind of the approach that we take in crypto. That's been quite different than the approach we've had elsewhere, where we're really trying to be a part of the infrastructure and help grow that piece. Obviously, the disruption of trading activities is not great, but not impossible to navigate. And it's kind of something that we expect when we're participating with very new systems like Serum and others that are built on platforms like Solana.
It's an interesting point. Well, let's maybe break down sort of exactly, and then we can talk about some broader things and zoom out. But how would you explain to folks maybe watching what exactly happened? I know that you kind of joked, Anatoly, that there's kind of 2,000 different plugs, so it's harder to tackle problems now that there's more moving parts. But what exactly?
Yeah. So technically what happened was during a Radium IDO, there were some bots that were really aggressively trying to take every token in that IDO, and they flooded the network with about 4,000 transactions per second, 400,000 transactions per second. And while that's normally fine and things should get dropped and prioritized correctly, there's some queues in some of the validator code that just grew unbounded and caused so much resource contention that the network started to fork. And that fork led to excessive memory usage, and a bunch of the validators started running out of memory and crashing. And that at that point, the validator community decided that it's going to be easier to merge in some fixes that were already in the works for this issue and restart. So from an outside user's perspective, you can think of it as normally there's a block every 400 milliseconds. And today there's going to be a gap that's maybe 10 hours, hopefully, if everybody comes back in line. And that is, sucks. Just, it's supposed to have a block every 400 milliseconds, but in terms of safety or something like that, or liveness even, the fact that the validator community can self-organize, compute the point in which restart is safe, and continue without any loss of state. That is effectively, Bitcoin's hash power dropped so much that there was a 10-hour outage between blocks. That doesn't require any human intervention, but from an external user's perspective, it's a similar impact.
How are the validators trying to help alleviate the situation? I'm not sure if Multicoin is a validator or not, but if you are, maybe you could weigh in. I assume you are, but I don't know.
I mean, we don't run our own validators. We work with a large number of third parties to do that. to help support the ecosystem. So I can't really comment on some of those activities other than I know that the validators are working with the core team to help restart the network.
Yeah, so a lot of folks like Certus One, Chorus One, Lido and Marinade, this is their area of expertise. They know how to run networks inside and out. They know how to monitor traffic and resources, and they're effectively, like IT superstars. So they know how to do this stuff, and it's awesome to have them in the community and kind of jump in and step in and help debug and deal with these issues. Solana, historically, our test nets have had a lot of these practice runs. So it's something that we've done, I don't know, at this point, a dozen times. So it's it's like a well-known procedure.
Yeah. Although I'm sure it can be a bit scary when you're kind of, having to build the ship as it sails. But, we've seen this. We see this in the centralized world, to Kanav's point. Exchange outages, brokerage outages, especially in crypto, is kind of par for the course. You just never want to see it happen. Obviously, this is one kind of impediment to readying that path for institutional capital, but what maybe are some of the tailwinds or tailwinds that you see? Obviously, there's interest, right? We've seen, Steve Cohen announced today that, he's backing a fund, a quant fund that's going to be trading in this market. So there's certainly a lot of interest. What other tailwinds do you see that's laying that path for them?
I think that the institutional investors are starting to actually fundamentally understand the value of neutral platforms. And we're seeing that understanding at higher and higher levels within these organizations. And I think we've hit a tipping point there. Obviously, there are going to be bugs along the way. There are always bugs. Software is hard. None of these bugs that we're seeing right now, whether it's, Solana outage or the Arbitrum outage or some of these other things, these are all fixable, right? There's two types of problems in the world. There's the problems that are, this is a bug that we can fix. And then there's the problem of oh no, we've encountered a fundamental computer science problem and we don't know what to do now. And thankfully, everything that we're seeing right now is the former and not the latter. And a lot of the investors who are coming in recognize that. They realize that this stuff is early and that the technology needs further work in order to get to a point of stability for that very, very large scale. But at the same time, they understand the promise of it. They understand what it enables. And that's why we're seeing this flow of institutional capital into the space. And very particularly right now into the Solana ecosystem, because there's always growing pains along the way. I mean, we all remember Twitter's fail whale back in the day, right? It's just they couldn't handle the load. Having a system that's unable to handle the load of how many people want to use it at the same time is actually a pretty good problem to have.
Andrew, how do you see that evolution playing out?
So I think, you have to sort of ask yourself what it is that traditional finance is looking for in a blockchain, right? And I think the big institutions, they're not typically where innovation happens. It's more the purview of entrepreneurs, right? And so I think the answer to that would be and this has been said before, it's a layer one solution that can support the products that already exist in traditional finance, right? So you're talking about payment networks, trading on exchanges. And yeah, you need a layer one that can support up to, over 100,000 transactions per second, right? I think one of the phrases, I watched a podcast with Anatoly and SBF the other day was they're looking for that single composable thread, right?
Yeah. Do you think it points to all of this, that the future of DeFi is going to be reliant on many different blockchains, not just one? I'll point the question to you, Kanav, right? Because you guys are involved with Pith. One thing I've seen come up is that, since it's solely, based on Solana, you have an outage like this, and then that domino falls too. What do you think?
Yeah, we're definitely of the belief in a slightly more multi-chain future. Solana is one of our highest conviction bets within the firm, and we think a massive shared execution layer with a lot of compute is incredibly promising. With everything that we hope to see happen on decentralized networks, even something as scalable as Solana, we think will become full. That's the optimistic case. And yeah, Solana can keep kind of vertically scaling, and there's been horizontally scaling, and there's a lot that we can do as hardware improves and as engineering improves. But there's also a case to be made for kind of more application specific logic where certain kinds of transactions can be prioritized or certain kinds of compute are done a little more cleanly. And so for us, we see the chain in the world playing out, like I said, in that more multi-chain fashion. That's been kind of a big conviction play in being involved with bridges. We think bringing kind of more important state that's generated, in various different fashions across the ecosystem to a compute layer like Solana that can generate a lot more interesting and exciting state is very interesting. Yeah, that's kind of most of what I have to say about it.
There's also not a lot of developer talent out there. Anatoly, we were talking about this when you were on the show on my podcast I guess it was a week ago or 2 weeks ago. How does that, like, for institutions and for even the projects themselves, serve as an impediment? I was talking with a guy who is leading this new fund, and we were talking about how they've brought on these people, but they just can't find any developers. There's just not a lot of people who, especially when you think about the more esoteric.
How much do they pay?
Yeah.
Seriously, you can find great engineers if you pay market rates, and great engineers don't care what stack they're building on, right? They can learn. They're engineers because they want to learn new things, and this is their job. So my expectation coming out of college was that I'd learn a totally new stack, new problem every 2 years. So it's just a question of how much money do you want to spend and what kind of engineers are you hiring?
Yeah.
There's 100,000 people working at Google, at Microsoft. All of them can build smart contracts. But you got to pay them a Google, Microsoft salary to switch.
Well, you get them over, and they get to work. What type of tools and new infrastructure can they build made possible by Solana? What should the trading firms listening in? What should they expect from Solana outside of maybe a day like today? What tools will they have that they didn't before?
I think compared to something like Ethereum, it's just kind of going like I don't know if you saw the comparison of Oracle price updates in Ethereum versus Solana through Pyth, and it's like looking at a low res image and a high definition image side by side. It's kind of like going to the net. You're dealing with data at a much higher fidelity, much closer to what their systems would be dealing with internally in a centralized system, and you can start building the same kind of processes for risk management and whatever in trading that you do on a centralized system, and that's, I think, quite different than building on Ethereum. Is you don't have to restructure your problem or rework it or try to innovate and fit it into a very expensive and slow and constrained place.
How would you say it's different from the experience with traditional finance? Maybe Andrew and Kanav can break that down.
Go ahead, Andrew. Yeah.
No, you go first. You go first.
All right. So when you're connecting to like a platform like Serum through Solana, you're talking to a peer-to-peer network over the internet, right? And when you're connecting to the NYSE or the CME, you're hardwired into Colo. You have a box connected in there, and both of those environments pose kind of technologically very different problems. On Solana, you're trying to make sure that your transaction is included. You're trying to propagate it over the peer-to-peer network. You're trying to make sure that the leader is picking it up. That you're trying to be more intelligent about the way those executions take place. And you're also dealing with this more interesting probabilistic fill that you get back, because chains can kind of reorg and kind of evolve in real time. And that's just to say that that's a new paradigm in market structure that most firms don't have mature stacks to deal with just yet. But trading firms have kind of been at the forefront of writing really scalable and really complex systems to deal with the most idiosyncratic nuances that exist on exchanges. And so, we've taken kind of an approach of trying to put a lot of the tooling out there, and really get in the weeds to optimize those engines and be early to this paradigm that we think is going to be pretty big. And so that's quite different. Of course, you're also kind of custodying your own funds. You don't have a central custodian. You don't have leverage through a prime broker. You have to figure out how you actually manage your own keys. They're all kind of completely new phenomena. And so that kind of feels more foreign. But once we build up the tech stacks to make it happen, I don't see why there's not a more natural transition path for other firms to get more involved as well.
I think for me, we take a very user-centric and intention-first view about how people want to interact with DeFi, right? And the user experience across most of the ecosystem is, in traditional finance, it's vastly superior, right? Or at least in traditional fintech products. And I think Solana really paves the way to be able to provide that user experience, that very good user experience that you get from traditional fintech products, right? Because when you're on Ethereum, which has pioneered a lot of DeFi, it's very slow. The gas fees make it so that there are barriers to entry there that are very reminiscent of traditional finance. And blockchain was really meant to be bringing unbanked to the bringing banking to the unbanked. So I think that's a solution that Solana really offers in terms of user experience.
Yeah, Tushar, you want to jump in there?
I don't really have that much to add to that question. So,
well, what do you think is as an investor, right, trying to back companies that are going to help march the project forward? What type of bets are you trying to make?
That's interesting. So we've been really active so far in 2021, and we've made a number of investments in the Solana ecosystem as well as others. What we're seeing is not only a number of really interesting DeFi deals, and we're seeing interesting primitives come up, right? And a lot of these have been explored, actually, right? We've seen a lot of these ideas for DeFi back in 2017, 2018, 2019. People were talking about it, and now they're actually able to implement it. And now they're actually able to provide a product that can scale. But in addition to that, the thing that we're also seeing is we're seeing the emergence of new types of what I would broadly categorize as Web3. And when I categorize that as Web3, I mean user-owned applications or user-owned businesses, right? We're seeing things that are similar to a Helium, which is a user-owned telecom network. We're seeing more and more ideas like that are too early stage to necessarily talk about them specifically just yet. We're seeing a lot of these user-owned, I'll call them DAOs, or collectives. One thing that we're seeing a lot of that I think is particularly inspired by Pyth in particular is data DAOs, where your data on its own is not that valuable. It's not particularly valuable, especially if you're just a person instead of a company. But even as a company, your data alone is not particularly valuable. But if you put it all together with other people or other companies that have valuable data as well, then it becomes really valuable, right? Jump trading data, price data is a certain level of valuable. But then when you get to all of the partners that Pip has involved, well, that is the whole is way more valuable than the sum of its parts. And we're seeing that same thing happen in other fields as well. So I've been particularly fascinated by the emergence there. So those are really the two of the major themes that we're seeing.
Yes. I mean, when you have, it's been very cool to see the caliber of company galvanizing around Pith, which I've recently learned how to pronounce properly. It's pretty cool to see, but at the same time, right, and not to be too cheeky, hasn't worked today. So if you were, relying on that data to trade lots and lots of money, you would have been in a precarious situation.
Yeah, I mean, network outage. Oh, sorry, Kanav, go ahead.
I was just going to say, we've been in many situations where exchange outages, overloads, kind of, failures at the highest point of bandwidth, highest throughput when the market's really moving have prevented people from entering orders on all kinds of venues, not only decentralized ones. I think in the long run, when you're able to actually, kind of work out all the kinks, the reliability you get from all the redundancy in a distributed system is a plus rather than a minus. And so, I mean,
I think we lost Kanav for a second. You there?
I'll add something.
Yeah, go ahead. Jump in.
Yeah, I was just going to say, to echo what Kanav was saying, right? Like, system outages are not good, but they're not exclusive to crypto.
As an engineer, how you define an outage is when a client cannot access the user, cannot access the network. And if you're telling the client that they're guaranteed access, with 5 nines or 3 nines or whatever, that includes price as well. So when Ethereum fees spike up to $100 per transaction, that prices out a ton of the clients. And from their perspective, it's the same thing as an outage. That's just the way it is. And folks are going to argue semantics, that the network's not really down, that if you paid higher fees, you can get your transaction in. But the reality is that if I expect 3 nines that I can access my funds for 50 cents or whatever I'm willing to pay, and now it costs $50, the network's not working. It's effectively dead, and that sucks, right? So that is a design that is extremely safe and extremely slow, and doesn't scale to support 100 million users, 1 billion users. There's no point for us to build something like that, right? That's not a venture fundable startup. It's not even a fun engineering problem to just to rebuild the same thing. So obviously Solana is way more ambitious, right? And the results speaks for themselves, that for, 30 billion transactions, the network operates fine. And then there's a 7-hour outage. Fine. That's fine. I'm willing to roll with those lumps in these early days. That's why it's still called beta.
What do you think about, there's data, that's one kind of use case. When you think about the speed, low cost of Solana, what are some other financial applications that you think can be built?
One thing that I'm pretty excited about from the multicoin perspective is social tokens and NFTs being built on Solana. We've seen these experiments be run on other platforms, but they're really meant for a mass audience, right? DeFi, I think, can work with higher fees because you can have clearing between massive organizations, right? You get even if the fees get really high, if you're a really big trading firm, it's okay, you can afford to pay it. You're just excluding everyone else, which isn't great, but it's still useful, and it still kind of does something. But then when it comes to things like social tokens or NFTs, like those are really meant to be mass market products. They're meant to be used by regular people. They're meant to be used by my mom and, you know, my friend who like is in, you know, art school. Like they're not meant to be just like big trading firms selling these things. So you need them to be cheap to use, and you need it to be fast. And, you know, we're really interested in some of these like broad consumer use cases. This also applies to what I was saying just moments ago about the data DAOs and like the collection of data, right? Like the way that those become really useful is you have a really broad set of users who are uploading their data and then getting rewarded with tokens and, you know, having useful things happen with that data. And to do that, you need something that's really fast and scalable and cheap. Otherwise, it just like does not work. Right, like social tokens that cost you $100 to transfer, it won't work because you're just not going to be able to build a big enough fan base with that.
Gotcha. Well, it's weird, you know, do NFTs, you know, to what degree NFTs, DeFi, I guess they kind of represent like the future of transacting sort of clout or culture or whatever have you. Well, let's double click on sort of consumer applications. Andrew, are there any that come to mind specifically?
Not off the top of my head, but I think you're talking about NFTs for a second there, and like the general use case for them at the moment is like these JPEGs and like the art scene, right? But I think there are more important uses of that technology, right? I think, you know, things like insurance, you can solve a lot of the KYC problem with NFTs, you know, being able to transfer insurance policies between different companies. NFTs can really represent like your medical data or like an on-chain identity. And I think that's what the real power for something like NFTs are. And it's really underpinning like another layer of decentralized finance, or rather decentralized insurance, you know, and insurance in its most primitive form was like, you know, these mutual pools. And blockchain really like affords the ability to be able to like do that.
That's an interesting point. What do you think we'll get? Like, how do we kind of, because there's like a technical problem on the back end, but there's also like a user experience impediment. Like it's tough to use a lot of this stuff, you know, not just to buy it, but to sort of engage with, you know, different wallets and kind of managing all of that as you know, we've kind of talked about it from the institutional perspective. It's tough for them too, but it's tough for users. If you want to get, I think Anatoly, when you were on the show, you talked about getting to like 1 billion people. How do we make it easy for them? Because you're not going to get 1 billion people with what exists now.
It's like really up to the product devs. Like, you know, folks like Phantom was a really good experience for us because we bet that there are teams that are just better at building products than anything that existed before in Ethereum. Just looking at MetaMask, you know, can we get a team that starts from first principles, builds a better UX, better wallet from the ground up, and doesn't like heavily just copy and paste what MetaMask is doing? And that was a tremendous success. And I believe you can do the same thing for everything that's successful in DeFi and NFTs right now. If you just have teams that are really product focused, that are focused on getting users and building really great, you know, experiences, once that happens, you'll start getting the users. That's really what's missing. A lot of, I think, product development right now in Ethereum is actually, I think, stuck by the old infrastructure that got built up for the last 4 years. And it's going to take a long time for those patterns to go away and get undone. So in a lot of ways, we have an opportunity, you know?
I think another way to look at it as well is that in traditional finance, how many people are really financially literate? You know, there's a whole subset of that industry that caters towards managing people's portfolios and their assets for them, right? You've got financial advisors, private banking, portfolio management, and you know, these all exist to reduce the cost of becoming completely financially literate, and that cost generally being time, which most people would rather spend on their hobbies or with their families, or maybe more immediately profitable with their jobs, right? So when you talk about DeFi products, they're new, they're not as well documented as their traditional counterparts, at least, and their composable nature sort of adds like this exponentiating level of complexity to it. And then you layer on top of that the whole idea that it's on a blockchain as well, which is another thing that people have to become familiar with. So just to echo like what Anatoly was saying, it's really being user focused, right? How can you streamline that experience? How can you make it as simple as possible? How can you have like maybe even like one-click solutions that service the different archetypes of user?
Yeah, it's definitely hard. Definitely confuses me sometimes. I want to go back to something you said, Anatoly, about how this outage maybe can be compared to other inefficiencies that we see in other networks, specifically gas fee spikes with Ethereum. Those are temporary though, right? So I don't know, do you really see those as being an apples to apples?
From a to a user, looking at this thing as a black box, you see the block times go from 400 milliseconds to 8 hours or whatever, and then back to 400 milliseconds. Right, that's all, right? So that's kind of like functionally what you observe looking at this thing as a black box, what happened. Versus you look at Ethereum and you observe that black box now wants to charge me, $50 for the same thing that it charged me 50 cents, yesterday.
Understood. So it's kind of like, but I mean, it kind of goes to like, what's more important? This is almost a philosophical question: your time or your money.
Well, bugs will get fixed, right? There are engineers that are really good at fixing these things, and that just takes time. So something like this, like to give you perspective, it took like 2 years to get like a Windows phone up and running, like porting Microsoft OS to ARM, optimizing it, getting it to actually work. And that was with, much more resources than what we have. And that's kind of similar class of problem, operating system on a new platform, with a lot of, ideas that are well-known, like well-known computer science problems that have solutions and a lot of folks working on them. It's still that process takes time. The only way to reduce that time is to simplify. And from our perspective, I think we simplified as much as we could while retaining this idea of a single giant composable financial state that's globally distributed, globally accessible to everyone.
Yeah. What do you think about all of the like kind of copycatting, or why there's just so much sort of just borrowing for what he has done rather than some new innovations given the throughput and different architectures?
Well, Serum is definitely an innovation. That's a totally different style of trading. Pyth is totally different style of Oracle. There's feature overlap, right? So it's still trading of tokens. Mango is a different style of derivatives engine, effectively. That's not based in a virtual AMM that you see on Ethereum. So that innovation for the financial side is definitely happening. So you can see those products and go play with them today.
Yeah, there's going to be some like common ideas, like Anatoly mentioned, like some feature overlap. But in fact, I would go so far as to say Solana has the least amount of copying of any other layer one chain, because like, Solana does not natively support the EVM. Right, where you look at some other chains that natively support the EVM, like it's copy paste. Like I took the code from Ethereum, I put it here. Oh, now it's a new project. I actually think that the decision to not support the EVM at the very beginning, at the base layer, was key to developing an independent developer ecosystem that is actually like creating new things. Now, like feature overlap, like, we are in crypto re-evolving a lot of things that happen in traditional finance over hundreds of years. We're just doing it like in the course of like 2, and like really, really, really quickly. So, like, is that feature overlap? Is that copying? Like, I don't know, but like borrow lend has been around for a while. Derivatives have been around for a while. I don't think it's fair to call that copying necessarily.
Yeah, and I think you need some of these primitive instruments on chain as well. Like you need your liquidity pools. You need like the pools like that represent like funds. Like when you have Sol Rise and Set. And I think if you were to have more copying, I mean, there'd already be like a significant lending protocol on Solana, and there isn't one at the moment. So I think any sort of copying might be a product of you've got talented engineers, but maybe not somebody to drive the product forward.
That went by really fast. This has been a lot of fun. I think 45 minutes. I like that. Sometimes these things go for an hour.
Thanks for posting that spicy take that I think Ethereum prices are an outage.
No, people are watching.
Some good farming influence farming.
Where did Kanav go? He freaked out and left. We've got a few minutes, so let's go around the horn and say what everyone is excited about for the end of the year.
What I'm excited about is getting, all these bugs fixed and getting to a level where I feel confident that we can remove the beta tag and call it, mainnet. So that would be awesome. But still a bit of work left to do, obviously.
Yeah, I suppose I'm excited about just our protocol going into DevNet in a couple of weeks' time, so people will be able to play around with that. In fact, I think it's live right now, but you can sign up for the closed beta on our website, and you can also utilize the Synchrony sort of indexing tool, to see like the other projects on the Solana ecosystem.
Say the thing that I'm most excited about is seeing a lot of these projects launch. I think a lot of people, when they look at Solana today, are looking at what I would call backwards-looking metrics, whether that's total value locked or number of users. And these things, I think, are just backwards-looking. I think the correct thing to be looking at is looking at how many qualified teams are building on the platform. Because like a lot of the products are just not live yet. The teams are brand new, right? Like they just got started this year. The ecosystem is pretty new. And so I'm very excited to see some of these things launch.
Makes sense. All right. Well, thank you guys so much. Talk to you all soon. And I hope you enjoy the rest of the demo day. Cheers.
Thanks, Frank.